Welcome to our Savvy series. I'm Catherine Magana, certified financial planner professional, here with Rachel Ivanovich, a tax strategist and wealth advisor. And today's series, we're going to share some planning tips and ideas to think about between now and the end of the year. And so I thought I'd get started with one thing that's been coming up recently is gifting. So obviously the limits for 2023, it's $17,000 if you're individual or $34,000 if you're married. But I think the reason why it comes up right now is because with the holidays coming up, if anybody's getting gifts, there's also times where potentially they're putting money in buy 29 plans or, taking some of the Christmas holiday money and investing it. Yeah,
to elaborate on that. So a lot of clients call the office and they'll ask, so I want to give a gift to my kids, maybe help them buy a house. They need help with a down payment. And so in terms of taxes, what that looks like is, so if for instance, I don't know, grandma wants to gift the family money for a down payment on the house, grandma can give $17,000 to each individual. So mom could get 17, dad can get 17, and then the two kids can each get $17,000 too. So it's a really nice structure, and or maybe your estate is at a point where you're thinking, I need to do some estate planning. How much money can I actually get out of my estate? But the $17,000 refers to the exclusion amount.
Correct.
So that's the amount that you don't have to actually report. There's no paperwork involved.
You can obviously do more, but then you have to report it on your taxes.
And honestly, when you do more, you just have to file a gift tax return. Yeah. It's not like you have to pay any money at that time. So
another thing that's coming up, I actually just revisited for myself was so some of the donations that we make to charities. So this is a real good time that I go back and look and see, okay.
Clean out your closet.
Yeah, I've also done that. I actually last weekend, I dropped some things off at Goodwill. And so just
like fall cleaning.
Yeah. So it's just one of those good time of year to kind of revisit some of those things. There's also not only making donations, from your taxable money, but also for those that have to take the required minimum distributions. Sure. Usually by now you've taken them, but you have until December 31st. But if you haven't taken them, making sure you took your required minimum distribution, and then also the QCDs. I don't know if you want to share that.
Yeah. So it sounds like there's kind of two topics there that we talked about there. So in terms of making donations to charities, we were joking earlier that people ask me what's the standard. I'll just do the standard donation this year. Well, there's really no standard, but I think what they're referring to is, do I have to have proper substantiation for, $1,000? Well, the answer is you have to have proper slips, or if you go to, let's just say the Goodwill, drop stuff off, clean out your closets, you have to have a slip if you have anything over $500. But if you give money to, I'm not going to name any charities here, but whatever your favorite charity is, you definitely make sure you're keeping not just the receipt, but, bank statement or whatever that could substantiate it. But what you're referring to with QCDs, that's a different topic.
Correct.
So that's about if you're over 70 and a half and let's just stop for a second, because the IRS or Congress increased the standard deduction a few years ago under the Tax Cuts and Jobs Act. And so the standard deduction used to be quite a bit lower. And so when you give money to charity, you'd be able to itemize your deductions and actually deduct those donations. And then with the increased standard deduction, it's much harder to itemize. And so what we're finding a lot of people are doing is they're looking at their IRAs and thinking, okay, well, I have to take a required minimum distribution of, $10,000. Maybe instead of doing an outside donation to my favorite charity, I'm going to take part of that IRA distribution, what's the required minimum, and I can exclude it from my taxable income, and I can take that money and I can send it directly to my favorite charity. And so that's called a QCD, or a qualified charitable distribution. It's really good tax planning.
Yeah, and if you already taken your required minimum distribution for this year, 2023, then perhaps start planning for next year. So just some things to be thinking about. I know we're already approaching the end of the year, but definitely some things to consider.
Planting some seeds, and it's a good time to talk to your tax advisor about it. Like, what does that look like, and your financial planner, professional.
And so another thing I've recently had some conversations with clients on is their salary deferrals. So if you're putting money in a 401k between now and December 31st, making sure that you've maximized that out if you're able to.
Especially if you have an employer match.
Yes. You want to make sure you're at least doing the employer match or more. And those limits are changing. So you want to do what you can between now and the end of the year, and then revisit again for next year and make sure that you have those increases.
Right. And another thing to really review right now is your tax withholding. If you're an an employee, make sure you're pulling your pay stubs. We don't get those really anymore. You have to download them, I think, right? So make sure you're looking at how much you've had withheld. Make sure you're comparing that to last year's withholding. And the IRS and the states have safe harbor amounts, so you don't get hit with any penalties. But it is a good time because you have a couple, maybe three pay periods left in the year that you can increase withholding or make an estimated payment so that you save some extra money.
Nice.
For presents.
And then another item that's been coming up a lot recently towards the end of the year is tax loss harvesting, and also looking at projected income and kind of what your income is for this year. So just kind of some things to look at is, are there some maybe individual stocks or positions that you can take a loss on and potentially maybe buy them back? So I don't know if you want to elaborate on that a little bit.
So tax loss harvesting in particular is important when you've had gains. So for instance, I had a client who sold their business and quite a bit of money. So that was a great thing. But also then looking at the portfolio and saying, oh, wow, I have some losses over here, which isn't great to have losses. But in a year where you have gains, you may want to sell some positions, like you said, just to offset those gains. It's a great planning opportunity. But you do need to look at, what did I buy and what have I sold? Because if they're similar in nature, if you buy or sell within this similar position within 30 days, the IRS will disallow the losses and won't let you write those off. So it's really important to make sure you're aware of what you've purchased and what you've sold, because there is like a 30-day on each side of the buy and the sell.
So I think as we're kind of wrapping up the end of the year, I think we're looking at goals for next year and just really getting excited about
what are you going to be doing?
Right?
What are your goals?
I have tons of goals, personal and professional. And so we do have a workshop coming up in December, and looking forward to having you join us. And so is there anything else you'd like to share before we wrap up today?
I want to hear what your goals are.
So to be continued. So we hope
next week.
Yes. So we do offer complimentary strategy sessions, or if you'd like to give us a call and chat about your current situation, you can reach us at 760-692-5190. And thanks for getting savvy with us with your finances, and we look forward to having you join us in the future. And remember, savvy up. Please stay tuned for important regulatory disclosures.
Savvy Women Wealth Management is an SEC registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.